Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, December 26th, 2023. Let's get on with the charts and take a look at the big picture. Of course, work our way into the day itself. And so we've got this descending band of channel resistance on the weekly chart. The top one is the more significant at 261.05 all week. The very same line study on the daily chart is at 259.48. I'll show that in a moment. And of course, we've got 254.04 all week long inside there. I don't even show that today. We've got other things going on there with the daily chart. But the point I'm making here is this is the zone to sell. Whether you're taking profits on a long position from a number of weeks ago, we have had a few buy signals that have indicated this upper area. So we have reached our objective that can absorb buying the 261.05 formation through January and even into later Q1. And from here we can fall away, rotate south all the way, perhaps back to this trend line that is, once we pull away from here, this line study at this point becomes a channel bottom. There is a channel bottom to be drawn now anyway. I just don't know exactly what the high is just yet. And once we get to pull away, to fall away, I should say, from here, then we can more properly commit to the channel bottom. But it is in the low 180s, upper 170s that I think is in reach over the next 2 to 3 months, 3 to 5 months, holding below 261.05. I can't call it a clear-cut objective, but I think you can set up for it. If you're a longer-term trader, and if you've been holding, let's say, Tesla for a matter of months, you may hold off until we actually do close above 261.05. So if you own the stock, you may exit that position and hold off to see what plays out in the weeks or months ahead. If you like trading both sides of the market, you can sell this zone that's been holding for the last week or so in anticipation of this trend line. This is the channel bottom essentially that is actually in the upper 170s now that I look at it. And we've got there's a lot going on in the upper 170s, not just that trend line, but we also have, and this is back to more condensed or a broader look at the market, 177.25. I think I could round down to that. That is a 5/8 downside Fibonacci that we've not yet tested following the July high, but we may actually ultimately wind up testing it in the months ahead below what is 259.48 on the daily chart. So this chart also shows what is our 1 to 2 week target now that I think is realistic, 231.89, and our 3 to 5 week target that I think is realistic at 211.58. But to call 177.25 a target, I'm not comfortable with that unless we actually settle below the 211.58 formation. That's not to say that we're going to bottom out at 211.58 through the rest of the year or anything, but I do think in terms of, the proper timing and such, I do think we could fill out the 231.81 to 259.48 region for the next few weeks. And we could fill out the 211.58 to 259.48 region all the way, through Q1, I think is a bit of a stretch because these converge by that point in time. But I think for the next couple of months, we could fill that area out. This, of course, assumes that we hold below 259.48. And I think that is kind of the big picture there in a nutshell. In terms of the day itself, I could show you 253.88. That is nothing more than this channel structure on the daily chart. We've had play both sides of it. I'm comfortable calling it a minor point. I think it offers decent intraday play for aggressive day traders. But 251.29 I consider to be our pivot point for the day. And that is nothing more. If I could zoom in here, I'd show just the last few days. The low from last Wednesday back up to Friday's high. On the way back down, 5/8 is 251.29, which is just below actually last Friday's low of 251.37. So we could tag 251.29, rally into the upper 250s intraday. If we break 251.29, 241.70, not out of the question. Now there are little levels all the way down, as there always is. But in terms of what is possible, breaking 251.29, we could actually test 241.70 today, which is nothing more than a rising 1/3 speed line projected off that late October low against the more recent high that was put out last week. 241.70 able to contain session weakness, and let me say a little bit about that. 241.70, I think 3 to 5 day traders, 3 to 5 day swing traders can play off of 241.70 because we could bottom out there through the rest of the week and rally back into the 250s again within several days of testing 241.70. But keep in mind that I do hold to the 231.89 1 to 2 week objective. So, if as we've been testing this area, maybe you've reached for 230 or 232 out of the money puts, as I mentioned, that don't expire. I would go at least a month out on that, even though I don't think it'll take more than 2 weeks. And if you've been doing that, great. If we close below 241.70, I think you'll be able to take profits on that within just a few days. Closing below 241.70, expect 231.89 within 2 to 3 days, where we could bottom out through next week, and from there round back up into the 250s again within 1 to 2 weeks of doing so. Also, some of you, longer-term swing traders, 3 to 5 week swing traders, may have reached out for the 210, 215 out of the money puts. And I would go at least several months out on that expiration. But there again, if we were to close below 231.80, you should be able to take profits on that within a week or two of doing so, because I would expect to 11.58 where we could bottom out, into February trade, round back up into the 250s again, following the 3 to 5 weeks of testing to 11.58. I think that covers the downside pretty well. I'm going to take you back to the weekly chart right now. There's your daily chart, 259.48, and your weekly chart at 261.05. Closing above 261.05 today, I think it can yield 268.94 within the week perhaps. And as I recall, 268.94 is this pullback high. And I could be wrong here. I'm going by memory, but I think it is this pullback high that occurred late summer, early autumn. Was this a September high, an August high? I forget. But in any event, it would be, I don't see, first off, if we close above 261.05 at the end of the week, by a full 1% margin. This week's number, it's mislabeled. Actually, no, it's not mislabeled. It's 263.66. So if we close Friday at 263.66 or higher, I show a 3 to 5 month buy signal to the 348.64 long-term channel top. And I think that's realistic. So we go from being potentially bearish here through Q1 below 261.05, possibly yielding the upper 170s over the next few months, to just the opposite, going decidedly bullish. With a settlement this week, Friday at 263.66, I would expect a 3 to 5 month rally to 248.64. But on an intra-week basis or a 2 to 3 week basis, this is the image that I'd like to show, that if we close, and I would rather use 261.05 today, so closing above 261.05, I don't think on an intra-week basis it necessarily needs to be by a 1% margin, but that certainly helps. I would anticipate 277.42. This could be a 3 to 5 day blast. It could take the better part of 2 weeks. 277.42 is rising daily. That's the daily chart. And then don't forget, on the weekly chart, we have this former channel bottom at 282.16. I'm calling this a range of resistance that is changing and rising daily. And I think this is our realistic 1 to 2 week target. If we close above 261.05, a 1 to 2 week objective into the low 280s, where we could top out on a weekly basis and even fall away from here over the following 2 to 3 weeks. As I've been saying, if we close above 261.05, we could fill out this ever widening wedge for the next 3 to 5 weeks before presumably then continuing onward and upward to the 348.64 channel top. So if we get that buy signal above 261.05, I do think you should liquidate all of your out of the money puts wherever they may be, because I think, for one, you could reach for a 280 or 285 out of the money call if you're a near-term swing trader, or if you're a longer-term position trader and you trade options, you could reach for 350, 360, 370 out of the money calls that don't expire. I would go a year out on this. I think it will take the better part of 6 months to achieve, but you always want to go further out in time than your projected time horizon targeting, just to preserve delta and eliminate the theta time decay element from your option premium. You know, I'm pushing 10 minutes here, and I'm going to leave it at that for Tuesday's Tesla report. You have a great, please click like, share, subscribe, and go to wickedstocks.com for that 5-day free trial. You will not regret it. You have a great day.